years, we knew that at some point the correction would come, and it did indeed unfold here, especially in the first part of the year. What has been really important for us was to be able to cushion this through the contracts and the relationships that we have with our customers, but also through an increased focus on our costs, making sure that we are ready for leaner times. And that's what the team has executed very well, and that's why we've been able to deliver this really robust first half year.
The post-pandemic era has meant that you've had to look at your business and ensure then that you fit in to what is new environment, new demands, which of course have ever changed since the post-pandemic era. How have you managed to, as you said, get leaner in your business?
Yeah, I think in this case, we have a bit of a short game, which is the adaptation to the leaner times, working on your costs and making sure you're competitive. And then there is also a long game, which is to respond to these changing market dynamics and the expectations of our customers. And there, our strategy remains the same. It is diversification into logistics so that we're better able to respond to our customer needs for the future.
You have the situation in China where demand isn't necessarily as the market would want it, so shippings to the likes of China could become a slowdown in the coming months. Is that something you're worried about?
Yeah, I think as we started the year, we saw China reopening as being one of the positive X factors for the year. Clearly, this is not really how this is shaping, which is also why we're maintaining an outlook that is fairly subdued when it comes to market demands, because we see different economies. You mentioned China, but it is true also for Europe's that show signs of weakness right now, and this will have implications on market demand.
Where are you looking then for growth areas? I mean, areas in which you're finding that they're actually performing a lot better despite how difficult global economics are right now.
So what we're seeing actually is a lot of the north-south markets, so markets in and out of Africa and Latin America, are actually holding out better than what we have seen in North America and in Europe comparatively. So I think for us, it is also about following demand and following where our customers want our services to be. And we have redeployed some assets in those markets to make sure that we're there and can serve our customers.
Does that redeployment make you sort of have less ability to service your other bigger markets that we have noted are slow at this time? Or does that mean you could kind of take on a little more staff?
No, it is really a normal run-of-the-mill, if you will, where our assets are mobile, and we have done over the years many times such redeployment where we actually are able to tack to demands. If demand suddenly picks back up into North America or in Europe, we will also be able to follow this and service our customers.
Yeah, a business of shipments means that you kind of have to go where the demand is, as you make note of there. Are you able to do that as quickly as the picture changes globally? Because one would think that in a situation where things are altering all the time, you would have to stay as fluid as possible in an ever-changing environment. How do you continue to do that when things are changing so quickly?
Yeah, you need to be extremely agile, and it is a skill and a capability that we have honed over time. We have been used to changing a very volatile and sometimes unpredictable demand for a long time, and that's kind of part of the operating systems with the teams across the globe.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.